Good afternoon, all. This is Fari Hemzi. It's about 4:33 p.m. Thanks, Thomas. On Wednesday, April 12th, 2023. Welcome. Housekeeping is going to be very short. One notable item is that notice that CME has raised their margins a tiny bit on Nasdaq. This happened over the weekend, I think, or maybe early this week. I don't look at it every day. Last week was normal. They raised it by a tiny bit, by about $1,000 on the NQ. So, and so they also did appropriately on the MNQs. So now remember, NQs they're doing offering 10% for intraday, 25% for MNQ. So that were adjusted accordingly. It's on the page that they post. That's that. On our end, work continues. We're finishing a small module for Tiger Shark. It actually is in the final stages of having his SOW finished, statement of work. So it helps the programmers know what I'm looking for. So we don't go back and forth so much and change this, change that. It saves time. I do a little write up and I'll do a little like a sketch if it's a presentation that I need. In this case, it's going to be a radar screen. So I want to report in the radar screen. Basically, it's good for multi accounts. Keeps track of where we are on margin, on the stops, all good things you need to know. Rather than using your head, you can take a look and see if you're hedged properly or not. Let's see. It's not distributable. This is just for my own work. The other one is 5.0. 5.0. Next week, this time, I should have a copy. They're doing right now the exits. I should have a working copy for what we call preliminary alpha testing next week this time. And then I'll have my job is to turn around by end of April and turn it into a beta test in May, which includes some individual testing, but first and foremost, what we do in the chat room. Okay. Our reports from the system houses are still behind because Marshall Fried, who kept that for us, and he's got his own money, his own statements. I try to be out of that, so this is purely third party. I just provide the code. They put up the money, they trade it, they report it back. I'm not involved on any of the reporting. I don't want to make a claim. The only claim we make is the back test we have. Well, we mark that. That's a back test. This is actions. Okay. Notice also that we moved his webinar from yesterday to 2 weeks from now because it's not doing well. That's part of the problem also behind with that. The statement of actual reports is he's got vertigo. He went to Antarctica and coming back, he's had some issues. I don't know how they compute time zones down there because they all come to a point, on the bottom of in South Pole or North Pole. So he does have some issues. I've talked to him a couple of times, and he's just not normal. So, as a good friend, I'm not going to push him, but he knows my urgency, so we'll try to catch that up with you. There's nothing else to report. It was a crazy day today. We'll show you in charts, but let's get to the second phase, which is the economic news. Hi, Dennis. How are you? Yes, I know. Our systems are go. Hey, Peter. How are you, sir? Hi, Brett. Hi, Jack. Hey, guys. Now, before we go there, guys, I don't know what's going on here, but we've had huge amount of hits here on this webinar, whatever that is, way above any normal values before. It is unusual, 224, but we're in the hundreds, 120s, 150s. All of a sudden, 275. I have no clue. I just don't know. We haven't done anything special. We only posted 3 places: LinkedIn, Facebook, and Twitter. So, and those numbers there are pretty much where they were. I mean, my numbers haven't grown up or down per se. It's just pretty much steady in that area. So I don't know what happened with this webinar. I know could be the fact that I exited went out. I'll get to the charts, but I'll give you a warning now. Most likely, I will have a new bias. Okay, we're flat right now. Hold on 1 second here. Let me see. Here. Here's our charts there. This is the last chart we posted, and notice that here we post up to what we have done. We've been flat since 31st of March. Okay. Well, so anyhow, I'm looking at the charts. I'm going to go over it with you. Let's go through econ data first, and then I'll talk about what I'm thinking. Okay. All right. Today we had CPI, and we downticked a little bit. Initially, market really took it well. Even my target chart did not have time to give a signal. That's how strong this was. The chart got railroaded by the news. Okay, and no indicator can predict that. But as you see, they were expecting a 0.3 and hit 0.1. The key point at this point is really month to month, not year to year, because once the slope changes, the most recent data is what matters. It's not what happened a year ago. Totality changes too, but you see how the spearhead is moving south fast. So you could see the others came in line. If you look at Exford and Energy, both month to month and year to year came in line. Really, this was a key number, and the market went berserk at the beginning. I did not trade it. As a matter of fact, I just walked in. I had like 4 or 5 minutes, and that's not enough to prepare to make a trade. And it was just super huge. Also, you had nighttime, what do you call it, margins. They used to have margins at 8, changing over to day trade. They moved it to 9. So the 8:30 numbers, you don't have a good margin. So it's an overnight rate. So, and that probably is not a bad idea. I've learned, and I wish others would trade with less of a leverage position that is using all their margin money, and they get into trouble. So it's not a bad idea, I think. Let's see. The other one I want to make a point here to show you is the MBA mortgage app. This is a Mortgage Bankers of America. You'd see that refinance is not changing. That's understood. Nobody needs to refinance at these numbers. That's not much of an edge. But look at what happened with purchases. 7.8 versus negative 3.5. So there's some life is being breathed into the real estate market. Now, key number is going to be tomorrow. I understand jobless claims that may pop. I realize that. Let's see what expectation is there, because we've had tech layoffs. Oh, okay. Yeah, still not showing much. Maybe a small uptick. We'll see. But these numbers are very, very noisy. But let's look at PPI. That's tomorrow at 8:30. And of course, FOMC meetings today. But I don't see if that did anything for us. At 2. Oh, hold on 1 second. 1 second. Okay, looks like, yeah. I had stopped trading by then, by the way. But by, let's see, by 2 o'clock. The new scan, yeah, they sold it. Yeah. At 2 o'clock, they sold it. Yeah, we went to a little bit of sideways, and then they sold it. Yes. Now, I was on the short side after that. You know, not a bad day, but I had paid a little bit extra commission. Okay. PPI, they're expecting 0 versus a negative 0.1%. Range is also tight. Forget about year to year. I want to look month to month. They think Exford Energy may go up. Oh, it's going to be a wild one tomorrow. Exford Energy 0.3. Yeah, no consensus on trade services. All right. What else do we have this week? I think we have consumer sentiment at 10 on Friday. I'm not worried about business inventories, but you got retail sales at 8:30 and 9:15. You have industrial production. This is going to be a big one. Shopping. 0.4, 0.4. This is a wide range there, guys. 0.9, negative 0.9 to plus positive 2. Wow, 0.2. That's huge. Yeah, retail sales. Vehicles. -1, -4. Yeah, That's also pre-wide too. So, you can't complain. We're going to give you fireworks. That's one thing the government does for you. You'll have fireworks rest of this week every day. So, again, my schedule, I'll leave in the afternoon, late afternoon on Friday. Got to drop off Tico, and then he's got to go see some of his girlfriends. And then, he's got plenty. And then I'll go to Miami, fly to San Francisco, nonstop, come back Monday morning on a nonstop, on a red eye, also nonstop. Then I'll come back here, pick up Tico around noon on Monday, okay? Because I got to get back here. I got to make sure all the Nancy, Cash, and Peter will be in early. We'll want to make sure that there's no issues with servers. I may take just my laptop. It's very thin. Not my briefcase, just that. Of course, I have my phone with me, which also opens up and acts as like a pad to handle the servers. So I have two modes to get to the servers in case. But I think Nancy and Peter, the expert that is, and Cash is very good with tech support issues. I think we're in a good space. And the part I'm going to miss is going to be just a few hours anyway. Okay, guys? All right. Hi, Anita. How are you? So let's go to the next problem, charts. Okay. Here's timer chart. The lows today and in the last few days, it looks like a week, we're riding on the low of +1 sigma. You're going to say, hey, that's minutia. I know. But I read the tea leaves. I want to take a look at that. That's holding. We had outside bar, small range yesterday. So this was not a surprise. But we closed at the lows of the day for about 0.4%. We're getting a little divergence there. Tiny, if any. It's hard to call it divergence because we don't have a higher high, yeah. But Momo is slowing down. There's no question. You could see it there. You could see it on breadth thrust. You could see a cross happening on CIs. The CI dips went negative. Okay. Volume is not that big, just beginning. But it's a possibility later on tonight, because remember, TradeStation, Time and Digest works on a closing basis. I may go close off of here. If I do, members will get an email. Okay. It goes to TradeStation, to Time and Digest first, with a copy to all the members. We're very transparent, and officially we're in when we get their confirm. They have to confirm back to us. They received the email within the time frame and it's valid. Okay. If you play hooky with the Time and Digest, they blow you out. They don't joke around. For that, for example, if you send the email in the morning and say, "Oh, I meant to send it last night," they said they don't care. Send it in the morning, you get that day's close. If you're sending it the night before until midnight, you get tonight's close. So that's how it works. Why do we do that? Because ES and NQ move all over the place. It's a matter of when you send the email, when they got it, who sends what. No. SPX always has a closing. So one index, lectures, Dow. Always have a closing. And it's 80% of US markets. Dow isn't. So this is the majority of the market, 80%, and of the US market. And they go off this number. So look for us going short today. Would we put a trade on? Depends what kind of time I get tomorrow or Friday. I'm not worried about it over the weekend. Our average trade there, and this came up since the last meeting here with you guys. I'll just go over it one more time. Here we go. Emails are not the best sometimes to go over. As you know, we keep a worksheet on what we do. It keeps us straight, keeps TradeStation, Time and Digest straight. It shows all of our signals, but what's more importantly is down here. Okay. We have traded 171 trades since November of 14, when we started using the new indicators. That's 2,147 trading days. On the average, our signals are 12.6 trading days, so a little bit over 2 weeks. So the weekend, I'm not worried. We usually do 3 to 4 weeks forward in terms of the pair that we pick for the option part of the PMT Pro. And one weekend is not going to kill our theta. So if we start moving our direction, if we do it early with a decent stop, we're fine. So we'll see what kind of day I have tomorrow. Friday is going to be a little bit tougher, but I wanted to get at least tomorrow in the PPI number. Okay, but that's where we are. By the way, this is the number of handles we have taken out in the last year to now. From this point, from February of last year to now, this is what I've taken out. Boom. We lost 16 handles. That's it. That's 15,400, almost 15,500 points in the Dow. Remember, it's a 10-to-1 ratio approximately between S&P and the Dow. So not bad. Trace Diamond still is not posting. They have not revived their newsletter. I don't know what they're doing. All I know is that they're interested in our emails and they keep track of it. Maybe one of these days they'll show up. It's been 2 years now with the new software. They were promising that with the new software they can keep track of this a little bit better. They did lost their data vendor, and listen, that's happened to me before too. You know, when Thousand Analytics got taken over by the Lehman, and then Lehman got sold out. I mean, went bankrupt, but also that division was sold out to a group in Chicago who had no clue what was going on. We lost our data vendor in the sense that they priced me out of the market. I used to pay $300 a month for the data. They sent me a bill for $10,000, and they want 3 months in advance. They want me to give them a cashier check for $30,000. You know what I told them? I told them, when you walk out the door, make sure it doesn't hit you in the ass. Okay? Why would I pay 100 times more? $300 versus $30,000? No, I'm not doing that. I'll figure another way. I'll figure out something else to do. Thank you. So, I mean, I understand that. That's probably what something like this happened. We don't have any details what happened to Family Dash other than they give us notice in late 2020 that the last issue would be January issue of 2021. That's the one I was called the Time of the Decade. So, nothing new. All right. Transportation and Russell. No signal here. We're getting sandwiched here between 200-day and 50-day. Nothing going on. Now, remember, Friday JPM report, so we'll see what that does. I'm gearing up for a fact that you're going to see a lot of CYA from CFOs. I think even if the numbers are good, they're going to guide down because everybody and his brother is scared to death of SVB and its repercussions. So, well, I think Mary Daly spoke today. I don't know what the excerpts were. She's the head of San Francisco Fed. But I'd like to get a chance to read that to find what her excuse is why they were asleep behind the wheel on SVB. Okay, D-trenders. Thank you. Okay, let's do our count. Up. So 1 1, 1 2, 2 2, 3 2, 4 2, 4 3, 5 3. So we're 5-3 positive. It's beginning to shift. It's slowly beginning to shift. Remember where we were down here when I went long. Everything was in the toilet. So beginning to shift. Once it gets to 8-0, then I'm nervous. Here was 0-8. So here we are. Okay. Again, D-trender, for those of you who don't know, new to my charts, it's a differential between the close, current close to the current 50 bar for this part and current 200 bar. Then normalize it. You have to normalize it by make it into a percentage. Otherwise, the scales are meaningless. You can't compare the two. But here, we normalize it so we can understand statistically where we are. One of the items I really like to look at is this chart, this one. Do it like this, I'm saying. Go back and take a look at how these were. That gives you very good clues. Why? Where Russell goes, NASDAQ goes, where NASDAQ goes, SPX goes. Now, they're being under a lot of pressure because of the interest rates. There's this whole thing about SVB had the most impact on Russell. Now, technology kept up. Russell was behind. Hopefully, Russell's trying to make back. Today was doing a little bit better, and then they killed it. They killed that too. Excuse me. We talked about this in the chat room today. I read these values early in the morning. This is SP1 Momo. We're at +1. Kiko, come here, boo boo. Come on, Admiral. Come on. Admiral is joining us. Come here, boo boo. Come and sit with Daddy. Come sit with Daddy. We're at +1 sigma level on SP1. Remember, the values mean nothing. These are scrambled by design. What matters is the pattern. We're at +1. We have done a double top there. So let's take a look at how that holds. I still think we're going to shoot down. And this is shooting down too. That was a very high peak. That's when we went flat. The exit on 31st was orchestrated. You all knew that. I said it the day before or 2 days before. That morning I said on Twitter, and then at the close we went out. So we didn't know what our close is going to be. We didn't know how many points we're going to have. But once the data was complete and correct, notice this is down to the penny. That shows exactly where the close was. Okay. The machine does all the rest of the calculations, including this plot. This is not done by hand. This is too much to do. Also remember, when we were flat, this doesn't move, SPX. Okay? It's what we call buy and hope, which is a play on buy and hold. But if we're not in a market, we don't move the SPX. Otherwise, because we're anchoring it against that. That's how the trade session uses it. So if we're flat, nothing changes in our numbers until our next trade. So this chart is not the exact chart of SPX. Why? It does not include when the movements there when we were flat. It just picks up where it was last in terms of a movement and catches up in a curve. That's the only way we can represent what we have done versus how this contest is managed by Tommy Digest. VXN, VXN, very flat. I think this is a signal for me, just like this was. To get long, this is a signal to get short. For this area, a lot of congested. And it's an inverse asset, so if it pulls up, we should go down. We'll see. SQ, noisy. Zero stick, 127, which is below 140, the median. So no signal here. Treasuries, okay. I'd expected more here, actually. On the fall, it wasn't. Originally, we fell down further as the number came. But then you can see how it rallied up once they sold the market hard. So, and notice yesterday, the front end, the 91-day discount rate with a new high. Marginally with a new high. Of 7-year, this is a 7-year high. So, yeah, it's kind of quiet. I mean, there's nothing here. But, I mean, there's nothing here right now for now. Yeah, but bond vigilantes have had a pretty decent last couple of weeks. So, they're quiet now. Don't get me wrong. They serve a purpose. So it's important for them to be there too. All right. Now, next week, we're going to have the expiration on VIX. You could see already. You see the volume? Yeah, you can see. See that how they cross? Yeah, I'd say by Friday, K would be lead, which is the K contract. That's May contract. So we're going to be long K, okay, and then short Q. Right now we're long J, short N. So April long, short July is going to be May long, and the 3 months later would be August. Then we start plotting that. So we'll roll over. Next week charts on next Wednesday are going to be reflecting that. What's the value? Negative 3.6. It's close to a low, maybe. Did that drop? I doubt it. I think we could. If you look at that scale. Yeah. 306. Yes. Yeah, when we get, I'm sorry. 0 would be a bottom. I'm sorry. 0 would be a bottom. I'm wrong. We're far from being 0. For -3, you can see where we were almost -3.5, maybe 4-ish, or 3.7, yeah. And the tops here were there. This was a little bit of an anomaly, but it caught up. This was a low in the fix. So remember, early April, things were a little bit dicey still. Okay, where are we on SP2? Let me make sure. Oh, you know what? Let me make sure this is up to date. Hold on. Let me post stuff. This is post. No, post. I don't know if I refreshed this since the close. No, it's still the same. Okay. Okay. Be a little bit softer on this end. Now let's go to SB2. SB2 is 56. That also tells me we're heading south. That means the short probably is where we're going to go. This is one of the best tools I've had. Very simple, easy to maintain, to manage short term, uh, let's say under 3 weeks period. Swing high, swing lows. Okay. And it's been just a loyal, what do you call it? Soldier of mine. It has always performed. Should be admiral about that, but it's done really, really well for me. So we're above. We have a golden cross here, so we're 50 jump over 200. We retested 200 several times. We pulled up. The key here is breaking 422. So we've got 70 point of work. If that 70 work comes, then we're gonna drop. Probably would be here, more likely 38, 70 areas. The 2 sigma. None of these numbers are going to be static. They're adaptive by design, so they're going to change as the numbers change moving forward. We just posted this near the close. You could see that we had a 64% down volume for S&P, 67 for NAS, and Russell was 78. Again, Russell just got cleaned again. It was doing pretty good in the morning. The rate of change was good, but they killed it. So that gets posted, and Tico does that. Okay, here's the 4 systems that run automatically, courtesy of Peter Cook. It's on the buy. That's NASDAQ. This is 24/7, 24/6. It's running. We have, let's see, buy here on the mid caps, DMG's mid cap. Sell on the Russell. We have a pretty decent long on the NASDAQ, but it's beginning to give some back. And you can see that strength come. Anything else here? Nope. Okay. I'm not ready for this. I have more work to do on this. Peter and I have to get together. My schedule is wild. I mean, part of the problem is also the trading. Trading is pretty exhaustive given what I do and with the 3 chat rooms and so forth. But you got to be in the battle zone. You can't be just academic. So by the time it's the end of the day, some days I just don't want to think about anything else. And of course, Pierre has his day, so we have to match what works for him, what works for me. But we plan to do a better job for you on these. These are some of the better indices compared to what CBOE has. Hey, listen, there's nothing wrong with have an open horizon and look at different values and different systems and policies. You just have to understand it. That's our big issue is. And there comes these ads. I hate these ads. Hold on. Let's see. That's 150. That's fine. Okay. Let's go to 5-year quickly. Update. There we go. Okay. You could see now, stepping back, 2018, 2020, and then last summer where we are. Remember, this is a July. That was a tough July. Then we rallied. Then we dropped dramatically. Orb made a killing here. This area, Orb did incredible. If we start dropping, we're going to be there again. Why? As a matter of fact, somebody was following my this chart. This chart and says, looks like you have an edge on the downside. It's not that. Just the way contest is constructed. You know, remember, people out there don't short typically. We do, long and short. If we're tactically good, like we did here, which never happened before. Okay. I think one time back here, maybe. Yeah. But when you're tactically correct and you have a big move, it's a killer. And also here too. This is 2018. I remember this one. This part I remember. When the market goes down and we stayed short, we gained because we stayed short, the market went down. Remember, it's a delta, okay? And so and then you have to switch over when it goes long. So you don't give it back, okay? Like we did back here, past like March 22nd or March 23rd or whatever of 2020. So you add the 2 vectors and it just, you kill it. That separation opens up. Now, we make mistake, we lose, we give back like here. And then here, of course, we probably had more mistakes here than before. 2021. 2022, yeah, we owned it. Now we're at all-time high. And now, not our differential though. Differential is not. Differential was probably up here, which was really, really incredible. The differential between where our value was and what was S&P. Again, that's a buy and hope also, because that's how like portfolio managers are, Morningstar, that kind of stuff. So that's where we are. And he understood it. The guy who made that comment, there's no issue, nothing to argue. I agree with him. Yeah, I said, yeah, this is it. That's how that works. Here, we're at 60% now. Again, we're above 55, 45 area, but we can turn around here and go down. We did here too. So we shall see. Again, this is the scoring number of stocks above 200. Okay, to recap, boy, this was quick. To recap, I'm planning to entertain a short area. I do not switch back and forth. I've learned that's very, very dangerous because you miss what you're trying to do. Because not just trying to close this trade, rather than concentrating on that, you're also trying to see if it's a good time to reverse. I don't do that. I usually take a couple of days off in between, get the dust settled, and see, because we're event driven. We don't have quota. Somebody wrote to me and says, I need one trade a week. I said, buddy, you're in the wrong place. Try Uber, 800 Uber, okay? 800 Uber. We don't work like that. We work a certain way. It has worked for us. You're welcome to join us. There's no pressure, but at the same time, we don't want any pressure from anybody. This is event driven. You cannot put a quote up and say, I have to get long this week, or I have to get short that week. No. But we give you some statistics, you get a sense what we do. Okay? Anything else I need to address? Oh, it's recorded, as always, will be posted, and the posting will be done on this node here, this link, our videos, which is our YouTube channel. Best thing is to subscribe to it. We have about, growing again, okay, about 1,620 there. And the moment it's posted, which is a few minutes after this, depending on what size the file is, you get an email. And of course, we also post on Twitter, LinkedIn, and Facebook. Yes. I'm sorry, what? Would American people accept the manufacturers? I have no idea. That's way above my pay grade. Would American people accept the manufacturing recession in a woke culture? What does woke has to do with economics or a recession? Now you confuse me. Remember, I've told you this, Anita, I'm not as smart as you are. I have no idea. All I know, I really don't worry about recession. You know why? Because I don't trade that long. All I want is this. So we understand each other. I want the market to change. I'm not worried about long or short, because I go home flat in the evenings anyway. Yeah. If you're doing 1-2% a day on your money, you don't need any other asset. Think about it. You just have to be nimble. And you're going to have a couple of days you're going to lose. I lose probably once a week at least. Okay, you've seen it. You hear me. You just have to make it the small and go. Aside from that, it really doesn't matter to me what goes up, what comes down. There's always something to short, and there's something to go long. So I'm not good at that. I wish I was. I just don't know. But I've never connected woke with the economy. Okay, so that's political subconscious or culture, but not recession. So that's I think we have a very mild. If we have a recession, it will be mild, unless I'm really, really wrong, because so far the economy is pretty strong. Now the economy. Remember, when we don't deal with the economy here, we're dealing with the market. Okay, so because the market discounts the future, I think the economy will slow down, and the market was going to be ahead of it. Remember last year I started shorting? There was no Fed change of bias yet. There were talks about it. I started shorting. So because the market discounts it. So if the recession people think is coming in aggregate, and markets are correct in that, it'll show. And actually, the market would rally. Market would rally. Why? Rates are going to come down. Market drops when they think the rates are going up. Market rallies before the rates go down. It discounts that. So as long as it moves for me, I'm fine. I'm cool. I have no idea. They can flip though. You mean what do you mean they could flip what though? You mean are we talking real estate? We're talking flipping their opinions. Would you expand on that, please? I'm not sure what you mean by flipping. Flipping what? You mean their opinions? Oh, keep saying no recession. I see what you're saying. Yeah. I don't think we're gonna have a recession that most people think we're gonna have. Okay. I just don't see that. And the key again is non-farm. Non-farm numbers have to, now that's a lagging indicator, but non-farmers have to get really bad. And we're not there. We're not there. And there's so much money being spent. You know how many Democrats passed bills last year with all that money thrown in? Some of them were bipartisan, don't get me wrong. Bipartisan. Some of the stuff hasn't started yet because you can't. Yes, that's a good word from the years back. Is it shovel ready or not? You could have the money, but you need plans, you need permits, all the stuff that goes in. I just don't see it right now. And it's the third year of a presidential cycle. Always they push the hardest in the third year because when it gets to election time, numbers look in glory. Okay, so you got that bias also. I mean, there are guys who actually, at the time of Dodgers, who were also market timers, 4-time Dodgers, have made the third year of the presidential cycle the cornerstone of their work. All over the years. I mean, listen, I've been with them since 2003. Read every weekend. There were 2 updates every Wednesdays and Saturdays. I probably read not 100%. I can't say that. That's not correct. But I would say I read probably 85% of it. And there were folks who that's just what they worked on. By the time we get to the third year, that's all their work was centered around. Much better than me, but it does work. It does work. If you look at, for example, Tom McClellan, Sherm's and Miriam's son, he's out of Seattle, I believe. His timing is not the best. I understand that his rankings were so on Tiger Digest, but he's got a lot of data-driven stuff. One of them is presidential cycle. With that in mind, I think this year is not going to be as bad as we think. It would be sub the level we are. I think we're probably going to see Michael Becker here. He's going to ask me. Hold on. Yeah, Michael will ask me that. Oh, okay, you missed that. Hey, Cash. Let's see. I think we do have a chance to test 3,800, maybe 3,700. Worst case 36. I doubt that, but I don't have all the time series. I don't know. I can't predict the future that far. But I don't think we're going to see 3,000. Okay. I don't see us really getting smashed here. I mean, for this to be awful, as a matter of fact, again, as we go into economy goes to recession, market starts to rally. Why? It predicts that the interest expense is going to drop, so earnings will go up. Coming out of recession, earnings will go up. So that's that counterbalance force. It's like the governor on a Watts steam engine. The governor, yeah. So you got that in play too. So we'll see. You know what? We're kind of in Goldilocks environment. So my biggest problem is really debt ceiling, and that's gotta get resolved. This is not has nothing to do with politics. This is not that's the absolute vote. It's a binary vote. Either we continue, or we all go and go fishing because we're done with the economy everywhere. So that's a separate issue. Obviously, we have some idiots who think they can play with it, but then what does it take to be an idiot these days? Not much. I think that'll work out. I think the cooler heads will prevail, always has, and they'll expand it. Listen, in the last 4 years of the last administration, we raised the debt by 25%, $8 trillion. Nobody else has done that. During that time, there were 3 votes. Nobody objected to extend the debt limit. So, yeah, so the folks who are talking about stopping debt limit are a bunch of hypocrites and idiots, and it shows from their IQs. Just look at what they're talking about. This is the thing we need to work on: the debt limit, and get it out of the way. You want to negotiate? Go and negotiate the next budget. Debt ceiling has to do with the last budget, not the current budget. So I don't want to get into politics, but I'm more of a facts and law and evidence. Anybody short on that, I'll just put a B-2 bomber after him. Capiche? Okay, I'm sorry. I'm from the Navy. We don't joke around. So. Anything else for me, ladies and gentlemen? Okay, I'm glad you guys showed up. Again, a reminder, our webinars are posted here. Right after this one, we post. Anything changes there, this is the best place to check. I had a couple of guys who were having email issues. I'm buying some pigeons for them. This is not the first time they had email problems. So we're going to pigeons. World War I. Yeah. The email's not working, but they're always working. As long as you can turn this on, you don't need a pigeon. Go there, it tells you what the dates are. All right. Thank you so much. Have a great one. We'll see you next week. Thanks, Greg. Appreciate it. Thanks, Dennis. We'll do so. Thanks. By the way, it's raining and it's cold in San Francisco. I got to pack some warm clothes. It's unbelievable. See you guys. Thank you.